Well, hello and welcome to the Middle Class Investor. It is Sunday afternoon, about 5 o'clock, and we're looking at the S&P 500, where we normally kind of start out. And one of the things you'll notice is that we did have an up week this week, as you can see right here, and really almost made some new highs, but not quite. And we still could make some new highs. It may be that this pattern is not complete. It appeared to be complete here with kind of an ABC looking move. These are kind of ABC, 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 and this of course looks a lot different. The other scenario is that this could be A and B, and C could be a doozy. So we'll just see how it plays out. But we are the bigger picture is we are expecting this megaphone pattern to complete somewhere down here in a wave 4, and then kind of migrate our way up into a wave 5 with new highs. So that is the plan, and we shall see how that works out. All right, let me make a little adjustment here real quick for my own benefit. All right, there we go. And let's look at the volatility index. So the volatility is down. We still haven't made a new low. We talked about this last week about it's unlikely that the volatility, makes new lows down here. It doesn't mean it's not possible. It just means it's not likely, given where we are in the market this close to highs and so on and so forth. So keep hitting that button twice. Let's look at the 13-week Treasury again. Just a lot of talk about the Fed. I mean, I am just so over listening about what the Fed should and shouldn't do, and what the Fed's going to have to do if this happens or that happens. Like I said last week, I'd like to see for the Fed to just be neutered in this whole thing, just have their power just taken away and we get rid of them. One of the things you'll note on the 10-year Treasury, we talked a little bit about the disconnect between the low here and the bond market. That the charts weren't exactly identical, and we talked about that the 10-year could actually make a new low, even though bonds weren't not going to make new highs. And it turned out that didn't happen. You got this really strong reversal in the 10-year, and even with this, people are still talking about zero rates. So I don't know. People just, I guess, think because Europe has zero rates, that's where we're going to go. I'm on record here as saying that is not going to happen. The bond market is topped. Rates are going higher. I'm 90% sure. So I'm going to leave that 10% out there just in case, because I was pretty sure back here, and then we ended up making lower yields still. So, but I think that is over, and the trend has in the bond market we've made a lower high and we've rolled over, and so bonds are headed down. Notes and bonds are headed down. All right, real quick, let's just look at Germany and Japan and some of these other countries. They look a little bit more, this could be some sort of counter trend bounce. Supposedly they're leading. These markets in some cases are already in recession, according to the news. You can see Japan here gapped up, ran up pretty good last week. The UK, same thing. The British pound, we talked about that being a good opportunity in the British pound, and that looks like that's following through in the markets. But we'll look at the British pound here in a minute. In fact, let's do that now. British pound is very, very strong. It just leaped out of range and is progressing higher. So we're on the British pound right now. Let's look at let's look at a weekly. So you can see, excuse me, we got this important low here. We had this move up, and then we've had this counter trend rally, and it looks like the counter trend rally is over, and now the British pound is moving. So, you know, it's a great place to be. British pound, I think it's going to be one of the, and I think the target, like I've got, is up here. The reason here, let me get this off of here. Let me do it a different way. I didn't have this before, so let me. I think there's maybe at least an ABC move out of this. So let's look at this. So I think your target. Let's move this target a little bit. Whoops. Go back. Let's move this target up to like right there to the 1.27. All right, let's put it in between the. Let's put it in between the 100 and the 1.27. Put it right in there. And I think this is a good area to trade to. You can see there's plenty of reward. The risk is from here to here. The reward is from here to here. So good. You could wait for a pullback. Maybe we get a pullback. Maybe we don't. I don't know. Normally, if it's an ABC, normally the C wave is made up of a 1, 2, 3, 4, 5. So if we zoom in here a little bit, I like to use the 4-hourly chart. If we zoom in here a little bit, anytime the 4-hour chart, this MACD2 line, which is a 1226.9, anytime that the fast line gets above the slow line, that's usually a trend change. So you can see here there was a downtrend. Now in this case, even though it got above here, it made a new low, which is kind of a divergence. But I use this 4-hour chart all the time to help me with where the potential trend change is. And what I would look for here in the British pound, if you feel like you're chasing it at this point, is I would look for some move back into this area. If you wanted to be more conservative, if you just got in right here, I think you need to be prepared for it to pull all the way back to here before it goes higher. I'm not saying for sure it'll pull back to here, but if it does pull back to here, it could still come all the way back to here and then bounce and go higher, and you're still not wrong. So that's what I mean by that. All right, let's look at the euro. Well, let's get back on a weekly chart. The euros, obviously, we had this really important low way back here in 2001. Had this big run up, this huge consolidation pattern all the way back here to the beginning of 2017. What looks like to be the first move up, a pullback, and now we're moving off of those lows from the pullback. I mean, this could end up going the way of the British pound. So it means it could potentially mean there's a lot of upside in the euro. It's slightly up right now, 0.03%. All right, let's look at oil. Now the markets are open right now, and so oil is gapped up pretty big. It's up 10.5%. Clearly some sort of news. I'm not sure what the news is, but you can see here, or maybe you can't. And so let me draw it like this. Let me zoom in first and then draw it, just to make it a little bit bigger. There we go. All right, so you can kind of see here there's what looks to be kind of a move down, and then potentially an A, B, C counter trend move. So oil could be pulling all the way down into this area, just below this low here. So we'll look for oil to do that again. Not draw it so straight in that way. So just below this low here. I like that. I like that forecast on oil. We'll see, and then probably again these last moves. If this is an A, B, C, the whole thing then C a lot of times is a 1, 2, 3, 4, 5. So 1, 2, 3, 4, 5. Okay. A, B, and then C down to here. So ultimately the target, for us is this lower line, mainly because we think oil is in some sort of consolidation, some sort of sideways pattern, very large sideways pattern. And so I'm expecting oil to come down at least to the low, the mid 30s, and maybe even as low as this, below 35. So anyway, that's oil, which is really weird because I got to tell you, oil going down with the dollar going down doesn't make a ton of sense given that oil is sold in dollars. But sometimes these markets correlate and sometimes they don't. You can't always rely on the correlation. So don't make that mistake. All right, let's look at gold. Big picture in gold, big run up, big pullback, likely to pull back here to this 700 area. But let's zoom in on what's happening recently. Oil had a really sharp run up. We pointed out last week that was at the 1.27% of, let me show you, of what? Let's zoom in here. So if you go A, B, C, okay. I'm sorry, if you go from this high to this low and expand up, this is 1.2%, 1.27% of this move here. Now, really what I think is happening here is we had an A move up, this is all B, and then somewhere in here, maybe here, C broke out, okay, and it's completed here. So it looks like oil might bounce a little bit, but then continue its downtrend. So I would not be a buyer of gold or silver at this point. Silver had even a more dramatic pullback. This is kind of what we call the Eiffel Tower move, when you get a really sharp run up, and I mean just about as fast as it ran up, it runs back down. And I would say it's probably got more to run. It's probably going to run into that area right there, before we see any kind of a significant bounce. So just get ready. Things are going to start moving down here a little bit. If we look at the ES right now, see how it looks a lot like the S&P 500. Right now we're down 10.5 points. And you can't really tell because it's kind of an inside gap down for the week. In other words, the market closed here, and see it's gapped down. It's gapped down into here, and it's currently running back up. So that's what happens with inside gaps, is they don't tend to follow through. They tend to run back up, close the gap, and then roll over and follow through. So we've probably got some lower prices coming in the S&P 500, and potentially we might get a better run at completing this pattern over the next, 6, 8, 10 weeks or so, maybe even 15 weeks, maybe longer, maybe all the way into the election next year. Who knows? But clearly, not clearly, potentially, the pattern is starting to roll over and cooperate, but we won't know until we start making, lower highs and lower lows, because right now this is just a volatility move down inside the range of the previous week's candle. Now, if we let's go look at a 4-hour chart. You can see what I'm talking about here. The gap down. So we gapped down and then ran down and then ran all the way back up, and we're up here, and looks like we're trying to close that gap. So I would expect that sometime between now and next morning, this gap will be closed, maybe even exceeded some, and fail to make a higher high, roll over and start coming down somewhere below here, and then we'll get a pretty good retracement, and then we'll get the next larger wave of that first move. it's pretty much the same thing over and over again. Hopefully, you're able to see, you're learning to see what I'm talking about, and you feel like you're relying less and less on what I'm saying, and maybe you're just using what I'm saying for confirmation. And that's the best of both worlds, is when you can start feeling comfortable and confident about what you see, and then knowing what action to take as a result of it. All right, that's really about it this week, everybody. I don't have any. There's nothing really in the news that I think, at least that I heard, that I want to bring up. And the markets are doing pretty much what they're supposed to be doing. Just share the good news about our webcast here, our YouTube channel, and we'll help our neighbors and friends. Hopefully not as many people get screwed over by the next financial crisis like they did in 2007, 2008. All right. Thanks everybody for coming in, and we'll see you next week. Bye-bye. Whoops. Hit the wrong button. Sorry.